We have all stars here, so Matt, I'm gonna hand the mic to you. Let's kick it off.
Okay, great. Thank you, Ada. Hello, everyone. My name is Matt Taylor, and it's my great pleasure to welcome you all to this space, co-hosted by Maverick Protocol, Tokemak, and Swell. We've got representatives from all three projects here to discuss what they see as the next phase of DeFi, a new wave of products and protocols built around liquid staking tokens like Sweth. Since the proof of stake upgrade and the Shanghai fork, ETH-based liquid staking tokens, or LSTs, as we'll probably say a lot today, have been booming in popularity as more and more users come to understand the advantages in liquidity and utility that they present over basic ETH. Perhaps even more exciting, we've seen LSTs enjoying increasing adoption across the DeFi ecosystem, and their integration into the composable infrastructure of DeFi promises even greater opportunities for holders of these tokens. We're here today to talk more about these opportunities, and specifically about how three projects like Maverick, Tokemak, and Swell can integrate to offer users compelling use cases for their staked ETH. I'm joined today by Carson Cook, founder at Tokemak, Daniel Dyson, founder and CEO at Swell, and of course our very own Bob Baxley, core builder here at Maverick. Thank you all for joining me. I think we also have a couple of other members of the Swell and Tokemak teams here as speakers in the space. I don't know if you'd like to introduce yourselves.
Yes, sure. I'm Manuel, and I work on Tokemak's strategy side, and I'll be happy to chime in with Carson whenever needed.
And this is
guys.
Craig. Go for it.
All right, I'll go. Hey guys, my name's Abby. I work at Swell. I work on everything here in terms of the liquidity and on the research side as well. So all the liquidity pools you see set up for Sweth, that's kind of headed by me, and yeah, looking forward to this chat.
And then on my side, I'm Salix. You can find me at ZeroX was going to introduce Abby and Daniel, but they've both done that already. But although Daniel could probably do a second one now that we've properly kicked it off. Also, Craig.
Yeah, I'll do a quick one. So this is Craig from the Tokemak side, and do a lot of things in Tokemak. Definitely don't code. Cover a lot of other ground, and a lot of that is on the partnerships and the growth side.
Yeah, and hi everyone, this is Ada from Maverick. I'm leading all things marketing here, but hand the mic back to you, Matt.
Wonderful. Wow, we got, a lot of wonderful speakers here. I have, I was preparing to pitch some questions to sort of representatives of each project, but it sounds like we might have a little bit more dynamics here with people from different teams jumping in, depending on the question. Okay, it's always good to begin a space with a quick introduction to each project, especially since we hope that this space is bringing together the community. Colleagues could also take a moment to explain briefly the fundamental ideas behind a liquid staking token like Sweth.
Yeah, sure. Firstly, thanks for having us, and welcome to all folks joining us here today. Really great to be here. By way of introduction, Swell is an up-and-coming Ethereum liquid staking protocol, and we're one of the fastest growing protocols in all of DeFi. We're the issuer of Swell ETH or Sweth, and we're the first liquid staking protocol to integrate what's known as Chainlink Proof of Reserve, which in effect provides you with greater surety around the underlying backing of our LST token as a genuine receipt token for staked ETH on the Beacon chain. As well, I think this timing is for this talk is quite opportune for folks who are looking to stake their ETH and or diversify their current LST exposure, and also to explore ways to provide liquidity on platforms such as Tokemak and Maverick. And at the moment we have quite an exciting offer for folks with our Voyage campaign, which is in effect a pre-token airdrop campaign. And what we're doing here is we're basically incentivizing early stakers and liquidity providers of Swell, together with platforms such as Tokemak and Maverick, to in effect receive incentives in the form of pearls, which will be eventually redeemable for a Swell token when we launch our TGE. And special perks as well are provided to Tokemak and Maverick communities also. But back to your sort of core question around sort of liquid staking itself. As for like a quick 101, effectively what LSTs do is allow you to have your cake and eat it too, through the issuance of a liquid staking receipt token in effect. And so functionally what this is a receipt for staked ETH on the Beacon chain, which can then be rehypothecated elsewhere in DeFi. And the net result of this, and why it's seen so much uptake, particularly off the back of Chapella, is that stakers can in effect earn their staking yield as well as incremental yield in DeFi by using LST such as Swell, and then redeploying the collateral on various strategies. And some of the most popular ones that we're seeing in the market now are liquidity provisioning strategies on protocols like Maverick and soon with Tokemak V2 coming out. And that's basically an overview of Swell and what liquid staking is.
Thank you. Remarkably efficient. This is also the first time I've heard it described as something like Swell described as a staking receipt token, and I think the idea of it representing a receipt is actually really helpful for understanding exactly how these tokens operate as part of the whole staked ETH paradigm. So we like to think of Maverick as a DeFi infrastructure, one that facilitates liquidity for projects like Tokemak to do creative things with tokens like Swell. And so in some ways, I think it makes sense to go next with Maverick after we've learned about Swell. So Bob, could you give our audience a quick general introduction to Maverick and then explain the particular benefits it has to offer LST liquidity specifically?
Sure. Yeah. So, Maverick, we launched at the beginning of March. It's a DEX, and kind of the core, there's a couple innovations. One of them is a new AMM. So the AMM smart contract, in any DEXs, Curve or Uniswap, whatever it is, that's setting the price that swappers pay to trade from one token to another. And then you have another party, the LPs, that are putting money into pools to provide liquidity for these swaps. And so we've seen the AMM space evolve over the years from unconcentrated infinite range pools like UniV2 and Sushi to stablecoin focused pools like StableSwap from Curve, and then concentrated liquidities from like range AMMs from UniV3. So you can think of Maverick as kind of standing on the shoulders of those giants, and we've built a new AMM that has more degrees of freedom and lets LPs get have more levers and more knobs to decide how their liquidity is priced and get more capital efficiency, and lets traders get lower slippage trades. So kind of the two big components of the AMM that are innovative is it's called a dynamic distribution AMM. So the dynamic part is that an LP can choose to have their distribution of liquidity move as the price moves. If you go look on chain at range AMMs, for instance, you see this sophisticated LPs are already moving the liquidity around, but they're spending gas to do it. They're having to orchestrate all that off chain with complex interactions. In Maverick, the AMM supports that liquidity movement natively. And so LPs can choose to have their liquidity follow price. They can have it follow price in just a bullish direction, just a bearish direction, or in both directions. So if they fall in both directions, that tends to be the most capital efficient. And then if you want to make a bullish or bearish bet, you've got less exposure to loss than say moving in both directions. And you're kind of making a bet on whether the price will go up or down. And then of course, Maverick also supports anything you can do in existing AMMs. So if you want to just stake a range, or you want to stake an infinite range, you want to have your liquidity not move with price, those are also all supported. So that's the dynamic part. And the dynamic part is particularly interesting for LSTs because an LST pair like Swell ETH, Swell is going to be growing in price relative to ETH, say 4% a year, 6% a year, whatever it is, based on the validator income. And so LPing that pair with a narrow range, with a high capital efficiency is really tricky in all other AMMs because this price is going to be moving with range. So you as an LP have the option to maybe just stake a larger range in other AMMs, but now you're not very efficient. In Maverick, you can still stake a narrow range and you can just choose to follow the price. Either follow the price bullish sweep or follow the price in both directions. And that'll give you exposure to little jitters as the sweep ETH price moves. So at Maverick, we think of what Curve did for stablecoins, inventing stable swap. We think of ourselves as doing that for LST pairs, inventing an AMM that's really helps you LP LST pairs. So that's the one component. Maverick also has this concept of boosted positions where protocols can decide to incentivize liquidity. And the novel take that Maverick has there is they're not just incentivizing the entire pool of liquidity. So that's what you would do in like a Curve Gauge or Sushi Farm or typical LP mining. You as a protocol are incentivizing the entire pool, from price equals 0 to price equals infinity, both assets, you're incentivizing all of this kind of equally. In Maverick, a protocol can decide to make a boosted position, and that can be a specific distribution of liquidity. So they could choose to incentivize price, say 1,800 to 2,000. And then they could just have a distribution that's a bell curve, for instance. And then they incentivize just that liquidity. And what that does is it gives protocols the ability to do, we call it surgical liquidity shaping of their global protocol liquidity. And so if the protocol feels like, the peg is off, they can kind of put up liquidity walls above or below the current price to make it harder for the peg to slip further. Or they can encourage liquidity further from price and create buy and sell walls. That can help with kind of recursive rehypothecation loops. Get a lot of liquidity for a protocol in an AMM and support lending on Euler or Aave and support it more efficiently than just encouraging liquidity across the entire price curve. So Sweeth has a boosted position, and it's in this mode both, so it's hyper capital efficient, and that kind of thing is also nice for a new protocol or new token like Sweeth because it creates a lot of volume, it creates a lot of liquidity depth around price, so there's not much slippage, and it stabilizes things like oracles and whatnot by having all that volume and all that liquidity right around price. So that's the very long elevator pitch of Maverick.
Thank you. Yeah, I guess it was a pretty tall skyscraper, right? But nevertheless, valuable and good explanation. So we've got 2 layers so far, right? We have the LSTs, we got Sweeth, this receipt token for staked ETH that lets you, enjoy liquidity, lets you rehypothecate your staked ETH. And now we've got Maverick as one place where that rehypothecation may occur, a place where you can LP your Sweeth with greater capital efficiency, maybe enjoy some rewards through these boosted positions and surgical liquidity shaping. The final layer in our stack then is represented by Tokemak, which we could describe as sort of a meta protocol that sits on top of both Maverick and Swell. Carson, would you or members of your team like to give us all an introduction to Tokemak, maybe Tokemak V2 specifically, and how it interacts with the other layers we've discussed so far to the benefit of users?
Absolutely. And I think, as you said, it's fitting that we started with Swell and Maverick and now have hit Tokemak because it really does build on these first 2 pieces. So you can sort of think of Tokemak is a abstracted liquidity layer or a conductor that sits on top of the tokens, in this case LSTs, and the DEXs. So you have an innovative LST like Sweep. You have a DEX with powerful tools and capital efficiency like Maverick. Tokemak sits on top of that. You sort of have the LST as the what, the DEX is the where, and then Tokemak is the how at sort of a really high level. So I'm going to start. This is probably for most of those on this call, they probably know the least about Tokemak V2. So I'm going to start a little bit on sort of who we're solving, whose problems we're solving with Tokemak V2, and then talk a bit about the core components and how we actually accomplish that. So first, if you take the LP, the liquidity providers perspective, so those that hold ETH, they want to hold some form of LST ETH like Sweep. if they're trying to optimize their yield, in other words, their staking yield, but also their liquidity yield, so yields that can be had on a DEX like Maverick, where there is fees plus other liquidity incentives, depending on the DEX that may come into play, it's very challenging for those LPs to optimize or to get an optimal yield because those yields are constantly shifting. LPs cannot easily optimize those assets. There's a lot of complexity associated with rebalancing across those pools and across those LSTs, and there's very high intrinsic gas costs. That's one big user group that we are targeting with Tokemak V2, our ETH LST LPs. Second group are DAOs, so LST protocols like Swell, DEXs like Maverick. If those groups are trying to attract liquidity, there's various gauge systems out there that really lack flexibility to change liquidity incentives or gauge weights in between voting rounds. And this results in very unknown depths of liquidity for a given amount of incentives that can be put forward. There's also a lot of delays for when LPs and actual liquidity flows into pools to follow incentives. So this just means that it's a very kind of finger in the air process whenever a DAO is trying to establish more liquidity, where they sort of need to throw incentives at the problem and just see what results. With Tokemak V2, it's really targeting a solution both for LPs and then also for DAOs to have understandable, manageable, and deterministic control over their liquidity. So within Tokemak V2, there's two core components to accomplish that. One is called what we call autopilot. It's a dynamic pool allocator that optimizes the yield for LPs across different pools, across different DEXs and underlying LSTs. And then the second component we call the liquidity marketplace, which is really a liquidity order book of sorts that can enable DAOs to rent liquidity according to a transparent market rate. So digging in a little bit into how we build this up, all of this is sort of centered around a core concept that we call the LMP, which stands for Liquidity Management Pool. An LMP is a core building block, which is configured with assets. In this case, we're talking about LSTs, even though going into the future, we can expand beyond LSTs, but right now we're laser focused on LSTs. So ST, ETH, Sweet, etc., and then underlying pools and DEXs. So things like Sweet ETH or ST ETH on Maverick or Balancer or Curve. So those are sort of the configurations that go into one of these LMP building blocks. On top of which we have autopilot, which I mentioned earlier. That really is a pool allocator. It's going to optimize yield across all assets and DEXs that are present in a specific LMP. And it means for the individual LP or the original ETH holder, there's no need to monitor yields. They don't need to hop between pools. They really can just supply assets, and all of the rebalancing logic takes care of all of the liquidity allocation, no additional gas costs, and they're getting dynamic exposure as these yields change, as the staking rates change, as the fees in a pool change, and as any additional liquidity incentives change. All of that complexity is abstracted away for the LPs in a very nice manner. What the autopilot then enables is something we're calling the liquidity rate. So liquidity rate is basically a unique market rate that is discovered by the autopilot in a given LMP or liquidity management pool. And this liquidity rate is basically a floor rate for the liquidity marketplace, which I'm going to get into in a second. So you can think of the liquidity rate as sort of the best available, subject to certain constraints, staking rate plus liquidity rate, which includes the pool fees and the incentives in the pool. And the reason this is so important is, again, taking a step back, I mentioned that DAOs kind of up till this point, LST protocols and others have had to very much use a finger in the air approach for throwing incentives based on how much liquidity they want, or vice versa. If they are trying to figure out how much liquidity, they don't know if they're going to overpay or not for that liquidity. Here, they can see the liquidity rate and understand exactly how much they need to pay for a given amount of liquidity in a pool, in an LST pool, on a DEX for a given duration and time. And that's what unlocks the last piece here, which is the liquidity marketplace. Once the liquidity rate is discovered from the autopilot tool, the liquidity marketplace is built around that. And this is a product where DAOs, including LST protocols, can rent liquidity in real time at a transparent rate, remove all the guesswork associated with today's incentivization of liquidity and liquidity provisioning, and pay exclusively for liquidity that actually gets allocated. So those are all of the different pieces, and we can go into a lot more detail, but I've already done quite a bit of talking here. But the important thing to sort of kind of summarize with all of this is for ETH holders that want an optimal yield in a very simple manner, that's what the autopilot is for. And then for DAOs, especially LST issuers or LST protocols like Swell, as well as DEXs like Maverick, they're able to control deterministically where liquidity goes at a predetermined rate known as the liquidity rate, which just isn't available in the market today.
And I'll add just one small detail, which is that this entire system is exclusively driven by market dynamics. And what I mean by this, it's that there is no voting for the allocation of liquidity. And this is a very important distinction when compared, for example, to V1, because if we want to offer optimized yields for LPs, we need to be able to algorithmically allocate that liquidity. And then all of this liquidity that is present on the autopilot is readily available to be rent on the liquidity marketplace. And then in addition to this, just one final comment with regard to autopilot, which is the rebalancing logic takes into account way more things than exclusively the yield. So we break down yield into several components, the base yield, trading fees, and incentives. But in addition to this, we check the underlying LST backing, and we compare it to the exchange rate to determine if it's trading at a discount or a premium. So we take that into consideration to also optimize the performance of the autopilot. And in addition to that, we have liquidity constraints that essentially ensure our ability to always exit any given pool. And as Carson said, this is really a meta layer of liquidity that sits on top of assets and DEXs. And it just abstracts all of the complexity for LPs that would normally be priced out from this. We did some quick math in terms of the gas costs that would be associated with this rebalancing logic. And basically all DeFi users would be priced out of this. So it's also a way to democratize access to complex rebalancing strategies that otherwise wouldn't be available for regular LPs. And when I look at, for example, Maverick, I see that Maverick is also automating the concentration of liquidity, right? So you are improving the user experience for LPs. I see Tokemak doing precisely the same thing with the autopilot, but on this other level, which just sits on top of DEXs and LSTs, as we previously mentioned.
Thank you for that, and thank you for everyone for these downloads on the three projects. Obviously, there's an awful lot of technical information across all of those explanations, but I think Carson gave us a wonderful kind of way to kind of summarize it all that I hope everyone in the space could, maybe kind of understand. So I'll repeat it to kind of help us get our floor underneath us. He said it's tokens like Swell is the what, Maverick is the where, the DEX where this Sweth is getting deposited and moved around, and Tokemak is operating as the how. He used the metaphor of a conductor that sort of decides where on Maverick the LST should be deployed. And I think that's a really useful kind of way to conceptualize this kind of organization of protocols as we're talking about it. So perhaps we could continue to expand the conversation a little at this point, and I imagine maybe we'll hear more people diving in at for these questions. So we've already had a bit of an explanation from Daniel about what LSTs are and their benefits, but I'd like to invite more people in the space to talk about why everyone here is excited about these tokens. Again, to use Carson's words, he said Tokemak right now is laser focused on LSTs. Where does that laser focus come from? Why are Maverick and Tokemak bullish on LSTs like Sweth?
Sure, I'm happy to start, and I promise I'll be a little more succinct than last time. So I think in general, as you watch what's happening right now with LSTs like Sweth, really recently the Shanghai upgrade was really kind of the last major barrier for widespread adoption of LSTs, and it was a significant de-risking moment for LSTs, and that means that the opportunity cost now associated with passively staking ETH versus holding ETH and not getting that yield has become too large to be ignored. And so this really is the moment for kind of an LST explosion. The adoption and uptick, we're already seeing it, but it's going to continue coming. And most importantly, as all of us on this call as DeFi natives, this really is the largest addressable market. And so at Tokemak, and I think I can speak for probably all of the protocols here, I think we're all committed to developing new financial products that sit on top of LSTs and that can create value in the case of Tokemak for both LPs as well as the DAOs. Also, some very interesting things that Swell has put in place, like in protocol vaults. That's a really interesting feature they have developed for Sweeth holders. So there's definitely synergies there that can be explored between protocols such as Sweeth LMPs that I mentioned before, the liquidity management pools that we have that can rebalance Sweeth holders exclusively through pools that have Sweeth. So a lot of things to be excited about with groups that are building like Maverick and Swell, and especially in a post-Shanghai world.
I think I would add, what another thing that's exciting about LSTs is it brings the yield back to the users, right? So, when we were in proof of work for Ethereum, you had to run a miner to get that yield. And then, before the Shanghai upgrade, you're running a validator. And now with protocols like Sweeth, we've democratized that yield. So you just have to hold this token. And we're going to see a replacement of ETH on chain with LSTs, because it doesn't really make sense. If you want to be exposed to ETH, it doesn't make sense just to hold ETH if you can also be exposed to ETH plus some yield. So I think that's going to change the game. It's going to it really is democratizing the utility and the value that comes out of Ethereum back to the users, which I think is super cool.
Yeah, and just flowing off the back of that, I mean, yeah, definitely post Chappella, we saw effectively the risk profile for LSTs drop significantly. And we're starting to see the trend now come through with more and more adoption of staking ETH, and the predominant sort of form staking is liquid staking. So definitely agree with both Carson and Bob here. And yeah, at Swell, we're very excited to be able to work with these protocols and really drive a ton of secondary market liquidity, in particular, to provide further reassurance for liquid stakers. And it wouldn't have been possible actually without some of the innovations that have come off the back of Maverick, which Bob sort of explained earlier on. And I think as well, beyond sort of the industry at large, I think Swell is philosophically driven as well to try to decentralize the LST vector overall, and trying to do that by being innovative and trying to build something that people sort of want to use, and leveraging sort of new technologies such as what Maverick and Tokemak are bringing to the table.
Thank you. It's also awesome to hear like the kind of the unified theme here of decentralization and democratization, right? The idea of whether it be to do with the yield from ETH or LP strategies, LP management, the idea that it's so core to the heart of decentralized finance, right, is the idea that making all of these things that used to be the provenance of guys in suits on Wall Street accessible to just about anybody who wants to get involved. And it's really exciting to hear all three projects aligned on that. We did hear from Bob on why he thinks Maverick is such a natural fit for LST liquidity. But perhaps Daniel, Carson, or other people from Swell and Tokemak would maybe like to expand his thoughts a little. Why have Swell and Tokemak chosen to partner with Maverick for LST liquidity?
Yeah, sure. From Swell's side, I mean, a great team, novel AMM technology that's purpose built for reward-bearing tokens or yield-bearing tokens like Sweeth. And just to sort of add to and echo Bob's commentary, we're seeing tremendous capital efficiency on the sort of the market for Swell ETH or Sweeth and in ETH at the underlying. And I think the sort of mechanisms that Maverick has developed is, it's sort of highly synergistic to LST pairs, and that's afforded by the sort of dynamic distribution model. And I think Swell at the moment is one of the largest, if not the largest, pool on Maverick right now, and we were one of the earliest adopters there as well. So we sort of saw the technology, and it's sort of something that we were sort of hoping for. And you can sort of see this in the relationship between TVL and just volume. It's almost like 1-for-1, which is typically unheard of in some of the predecessors for AMMs, which are perhaps more sort of focused on stable swaps and things of that nature. And what's more is that we've been able to do this quite organically without the typical sort of mechanisms that like previous protocols have done with the governance tokens. Swell doesn't have a governance token, so we're able to create this healthy, robust, and diversified sort of aggregation of liquidity providers. And Maverick for us serves as a major avenue for swaps at the moment. You can see that sort of on chain, and sort of to use the term, that surgical liquidity shaping. I'd be remiss to not let sort of Abby, our chief surgeon here, provide some commentary as well. Abby.
Hey everyone. So in terms of liquidity, to be honest, for us, like Maverick was a really obvious choice. When you're trying to set up like an LST ETH pair, that the assets are going to be super correlated, and so you sort of want to create a situation where you keep that range as tight as possible. But then, as Bob mentioned earlier, the problem with like static range AMMs like UniV3 is that to account for the actual like appreciation of the LST, you either need to set the range larger, which reduces capital efficiency, or use a protocol like Arrakis or Gamma, where the range moves, but then that introduces gas costs, and it eats into the actual returns that users get. And that's why like Maverick made a lot of sense for us, because the range moves on its own, and so you don't need to worry about that, and then you just need to set the range tight around where the peg is, and then because that liquidity is so tight, you get a huge amount of liquidity, capital efficiency, and as Daniel said, so it's pre-token. So a large problem that we were trying to solve was creating deep liquidity without having to fund it with token emissions from our side, and so we had to be really purposeful in where we did put the TVL and directed our users to deposit. And like just some like quick stats on our Maverick pool. For the past 7 days, we've done like 230,000 average volume on the pool, which is pretty insane for the TVL that we have compared to like other XY K constant curve AMMs. And I think like something that maybe an oversight is that when you have concentrated liquidity like this, which is set up, you also create a pool that's more decentralized, because you don't need big market makers to come in and fund the liquidity in the pool. You can do it with less TVL. And so interestingly, our Maverick pool, 36% of the TVL in the pool is made up by people who hold less than 1% of the pool. And the remaining percentage of the pool is probably consists of like 15 to 20 other people. And so, we've created a super decentralized and efficient pool on Maverick. That's it for me.
Yeah, so just building on what Daniel and Abby said, it's really all about the capital efficiency. So the Maverick's capital efficiency is a game changer. If you look at the trading activity per capital base or per TVL, it's such an innovation compared to what's out there. And I would say at Tokemak, going back into the last cycle, as we've been looking at liquidity, we've seen firsthand how incentives that are not sustainable incentives that protocols throw at liquidity, it just isn't a sustainable long-term solution. So I think with Tokemak V2, our goal is really sustainability of liquidity, sustainability and control over liquidity without the need for token emissions. And so seeing Maverick's current success firsthand is completely aligned with what we are building at this higher abstract meta liquidity layer. The dynamic range orders that are available within Maverick, where you can shift the concentration of liquidity around based on TWAPs. That's super useful for us to leverage and enables Tokemak to then include in our autopilot product a DEX that automates the concentration of liquidity. The capital efficiency, I kind of mentioned the trading activity per capital base. Maverick's capital efficiency, the result of that is that its organic revenue is based on trading fees instead of just sort of emissions. And that's super interesting and sort of establishes Maverick's pools as an important destination for liquidity for Tokemak, and it's a big win-win for all DeFi users as well as the protocols involved. So it's really just kind of alignment. Not one, it makes sense due to the capital efficiency, but two, it's very aligned with where Tokemak wants to see liquidity head in the space, and where we're also helping to make sure that we establish sustainability up at the meta liquidity layer.
Yeah, and then just one final comment on this. So the autopilot really reacts to market dynamics, right? So we even call this reactive liquidity. So what happens when we have these high organic trading fees on Maverick is that the pool allocation system that we have on the autopilot will allocate more TVL to these pools, which is where it should be allocated in more efficient pools. This is giving better trade execution for DeFi users and just improving overall the user experience.
Yeah, I mean, it's great to hear you guys are getting value out of this. And I think, what the Tokemak is doing is also super valuable. I think Maverick is still somewhat complex to LP there, and having an ability to kind of optimize your yields across pools and across strategies, there's definitely a huge space for that. I think about the liquidity aggregation space is kind of how I think of Tokemak. We've seen the trade aggregation space is really consolidated and is mature with 1inch and Paraswap and Odos and some players that have already kind of figured out how all that should work. I think it's still really early for liquidity aggregation, so it's great to see Tokemak innovating there. And then
it's interesting.
Super exciting too. Go ahead.
It's interesting, Bob. I was listening to one of your Twitter spaces with ZK Sync, and you were mentioning precisely that. If you have the DeFi integrations, you'll just see volume being routed to Maverick due to its capital efficiency. And one of the ways that I've been trying to explain autopilot to friends of mine is that they can imagine this aggregation layer on Tokemak as a 1inch, but for liquidity allocation instead of trade execution. So your comparison is really perfect in the way that we see the autopilot. And obviously, this outperforms a static exposure. And what I mean by a static exposure, it's single pool exposure, right? There are so many options for ETH holders to LP to ETH LST pools that it's really hard to track all of these changes, and above all, being able to do it in a gas efficient manner. So this is really the problem that we're trying to solve, and abstracting complexity from LPs is definitely a priority.
Thank you, everyone. I'm thinking hearing everyone talk about all of these synergies, it puts me in mind of long-time listeners of Maverick Spaces will, of course, have heard Bob talk about his concept of money Legos before. And I think, what we're really seeing here is the kind of the realization of that metaphor, because the thing about Legos is that they fit together in certain ways, and we're hearing from each of the projects how they're finding answers to kind of small answers or solutions to kind of like difficulties in their own projects in the other projects, right? Whether that be hyper efficient liquidity or abstracting away complexity. It's wonderful to kind of think about the way that the three projects kind of merge to produce all these opportunities for users. We're getting towards the end of the space now, and so I'd like to turn our collective eyes sort of towards the future. What do all of you see as the future of this new LST-based ecosystem? I think I can fairly say that you're all very bullish on LSTs and the things that are being built and will be built on LSTs. So where do we think this is all going? Do you think one day we'll be talking about something called LST-Fi on the same level as DeFi? What's the future for LSTs and the projects building on them?
I think that LST-Fi will become DeFi. We're just in this initial transition, right? But the opportunity cost of staking ETH versus holding ETH will make this evident. And slowly, as time progresses, we'll converge to no distinction between both terms.
Yeah.
Yeah, and just go ahead.
Okay. I was just going to say, just from the liquid staking side, definitely agree on the opportunity cost of holding ETH versus holding a liquid receipt token. You can sort of play out the game theory yourself, but I think and sort of figure out where you personally think the terminal staking rate for Ethereum will land. There have been pretty wild range of speculations from 30%, 50%, 80% plus. But I think as liquidity for these assets continues to rise through products like Tokemak, like what Maverick are offering, and these things continue to be sort of like the default liquidity hub across DeFi, that eventually you see these assets completely replacing ETH, and then long term, the onus is on us to sort of make these things as useful as possible. So definitely agree. LST-Fi is essentially replacing LSD-Fi on a long enough time horizon.
Yeah, and I agree with everything that was just said, and just maybe put slightly a different way here. With ETH being the dominant market cap within Ethereum-based DeFi anyway, and then naturally LST ETH growing in that market share and also being dominant within kind of the market cap of Ethereum-based DeFi, naturally LST-Fi is and will continue to grow into a bigger and bigger component of DeFi, and ultimately, therefore, will take over much of DeFi or much of DeFi activity. And so I think in the future, the distinction between LST-Fi and DeFi will become less and less important as time progresses. But for right now, it will certainly be talked about as a subset of DeFi.
I think LST liquid staking receipts for ETH is just the beginning, right? Any yielding assets you can LSTize, right? And so it's interesting that we're seeing that as a fundamental new primitive in DeFi. It's pretty exciting time. So I'm sure we'll see all kinds of innovation the next couple of years around that.
Yeah, just to sort of piggyback off that, agree with all the commentary here. I think the rate of stake participation at the moment is about something like 18% or so. I think in the medium to longer term, we will sort of see that move to parity on other POS chains where it's closer to something like 60 to 70%. I think overall that's a net positive for Ethereum. Ultimately, the staking mechanism is a mechanism for economic security. I think at Swell, we're going to continue to try to build responsibly and try to ultimately be a force for decentralization in the LST vector space. And I think it sort of stands to reason that LSTs, particularly those that are genuine receipt tokens, will in effect replace ETH as the base pair for DeFi, and that's sort of the mental model that we've been operating at a principles level when sort of designing Swell. So yeah, overall very, very bullish on LSTs, and I think it's great for the Ethereum ecosystem at large.
And maybe another way of restating liquid staking tokens becoming the base pair is that liquid staking tokens will become the unit of account in DeFi. So today we're thinking about things in terms of ETH often. And as we're building more products and more utility, and people are more comfortable with holding LSTs for the long term, I don't think it'll be too long before we are now thinking in terms of LSTs. And I really do think that changes the game for security and yield and the attractiveness of this space in going into the future.
Yeah, thank you all very much. I feel like what I'm about to say is a little reductionist given the scope of your comments, but if I could identify a few, there's a kind of a few possible milestones I think came out in that discussion. One of which would be following, following the general kind of staking of ETH, looking at the percentage of ETH that is staked. But we're also thinking about will, as just watching for liquid staking tokens replacing ETH as a kind of dominant kind of quote asset. So, I think even on Maverick right now, most of the LST tokens are in pools against ETH, but we're talking about moving to a paradigm where we start seeing them replace ETH in other pairs. And then the final one was that last point, right, about the more of a conceptual shift, right? This would be a real paradigm change if we move from ETH being the unit of accounting, which I think we're all familiar with, it very much is, to liquid staking tokens taking that role would be a real kind of marker of where we're moving in this space. Fascinating stuff, everyone. On a slightly lower level, what's next for each of your projects? What is it you're excited about? What is it you'd like our audience today to be on the lookout for? Perhaps I'll kick the mic to Carson or someone else from Tokemak to get us started on this question.
Sure thing. So we are shipping code to audits sort of as we speak, and the next major milestone is going to be the launch of our LP or our ETH holder facing product, the autopilot that we discussed. Following that launch on mainnet, we're going to be quickly expanding to L2s and launch then the liquidity marketplace once that liquidity rate through the autopilot is discovered, and once kind of the TVL bootstrapping phase is concluded for the autopilot. So all of the Ethereum holders, ETH LPs present in the audience are very much welcome to try out Autopilot and experience firsthand all the benefits. That is going to be launching in August, and we'd love to have all of you try it out and experience the future of ETH yield at that time.
Just to add here, so I really see this as an evolution of static exposure to a dynamic exposure. And as Bob mentioned, this is really liquidity aggregation. So very excited to have people that want to have a directional exposure to ETH using the autopilot and just experiencing our value proposition firsthand.
Thank you. Daniel and Swell?
Yeah, sure. What we're excited about is continuing our collaboration with Maverick and Tokemak. They're very excited about Tokemak V2 and the autopilot and liquidity marketplace. I think, things that are bring more sort of more of a deterministic and predictable outcome for us as a DAO, and also for our liquidity providers is something that can only be welcome. And I think what we're particularly excited about is our current Voyage campaign, which has been going really well. We have, I think we're pushing on almost 6,000 early stakers or voyagers returning them. So if you haven't staked, please feel free to jump on the Swell app and give it a spin.
Awesome, thank you. And Bob, what's next on the horizon for Maverick?
We got a few things cooking. So our phase 3 dictates a kind of a voting escrow mechanism. So look out for that. And then we're contemplating other chains. So that's kind of the things on the top of our mind right now.
Awesome, thank you very much, Bob. I'm going to draw things to a close, I think, at this point. I'd like to thank all of our guests, not just Daniel, Carson, and Bob, but also all the other wonderful members of the Tokemak and Swell teams who joined us and gave us their time today. And of course, thank everyone here in our audience for joining us. I hope you're all as excited as I am about the potential for LST-based DeFi. Thanks also to Tokemak and Swell for co-hosting this space with us. We are delighted and feel very fortunate here at Maverick to have two such wonderful projects as partners as we move forward with all of these exciting enterprises we've discussed today. Thank you all very much. I look forward to catching up with people again at another space in the future.
Thank you so much, guys.
Thanks, everyone. Cheers.
Thanks.